Good morning, and thank you for attending our webinar presentation this morning. My name is Jim Guinan. I'm an annuity manager here at Financial Brokerage, and I want to welcome all you to our presentation today. We will be joined and will be presenting is Jeff Altemeier from North American Internal Sales. So we want to welcome Jeff. He will be talking to you in just a few minutes about one of the strongest products in the industry with an accumulation story and also with added benefits. And Jeff's also going to talk regarding some other events going on, the new things going on at North American, including the EPC program, which he'll tell you more about. So I'll turn the presentation over to Jeff here in just a moment. But before I do that, I want to talk to you a little bit about some things that are happening here at Financial Brokerage. Our webinar will be recorded today. So if you need to review it a little later on, it'll be available later on today. And also, if you have any questions for myself or for Jeff, please feel free to type those in and we will address those questions, as many of them as we can before we leave today. So with that, I want to get started. I'll tell you a little bit about myself. I've been working with fixed annuity sales with several different IMOs here in the Omaha area for the last 21 years. So that's the only thing that I work with. That's my area of expertise, is the fixed products, fixed index, accumulation design products, as well as income. So be glad to help you with any needs going forward. Please feel free to reach out to me at any time. Our topic today, again, is the accumulation or enhancement riders, the VersaChoice product with North American. Okay, I want to tell you a little bit about some newly announced incentive trips through Financial Brokerage. As you can see on your screen, we have two for the 21 production year. So we're already starting in on your qualification towards these. Our lower qualification trip will be the Oak Lake Lodge and Outpost in Ontario. That's, as you can see, the premium for life and annuity to attend that, it's 35,000 success shares. And then our larger or higher qualification trip is to Sandals Emerald Bay in the Bahamas. And as you can see, that's, excuse me, sorry about that. That is a combination of 45,000 success shares. So we look forward to helping you this year with your annuity, life, hybrid business, Medicare, all qualifies for those incentive trips. And then I want to talk to you a little bit about our agent referral program. As you know, our business grows as your business grows. So in your business, you depend on referrals to help you write the business that you do. And it's very important to the lifeblood of what you do. So that's the same here at Financial Brokerage. And this slide here tells you, I should say, what it means to us for you to refer agents to us. So the program has changed over the years, and now it is a way to really build a base for you. So please let us know who your producers are that you would like to put us in touch with for annuity, life, as I mentioned, all of our product lines. You can see there all of those that we place through all of the carriers that we work with on a daily basis. So it's truly a way to continue to grow your business, build an agency as such without the headache of actually being an agent manager. So please let us know who those individuals are. We'd be glad to follow up with them and provide them the same expertise and experience that we do for you. With that, I will turn this presentation over to Jeff. And Jeff, I will let you take the reins.
Excellent. Well, appreciate that intro, Jim, and definitely excited to be here with everyone. And as Jim said, my name is Jeff Altemeier. I'm an internal wholesaler here at North American. I've been with the company going on 7 years now. So really appreciate everybody's time jumping on here, and I think we've got some great things to talk about. One housekeeping item, Jim, I'm not seeing the scroll through on the slides. Have you been moving those?
I I did once. If he's not.
Okay. Because I still see the intro slide, but either way, we can kind of keep moving there. So apologize about that. The work from home environment, right? That it has been what it is with COVID. But to jump in, I think first talk about North American. If you're not super familiar with us as a company, been in business for over 130 years, and then as we think more specifically about the annuity marketplace, we've been around since the birth of indexed annuities, if you will, and in the late 90s, early 2000s, whenever you think of that. And I love our long-term focus, if you will. So not only have we been around since the beginning, but if you've been doing this a while, you've probably noticed, some companies jump in, they jump out. There's been a few of our counterparts that have been around the whole time, but a really steady hand as you think of North American, and a couple of reasons we can do that. One, we're privately owned, so we're an ESOP company. As you call in, if you talk to anybody in the company, whether it's sales, client services, commissions, suitability, whoever it might be, we all think like employee owners because we are that. And one thing I love about being privately owned is we don't have those quarterly earnings pressures, right? So we don't have to make quick changes if we need to put something on the bottom line. So we have a super long-term focus, and not only a year plan, but 5. We've got 10-year plans, and we are super committed to the annuity space as a company. Just built a beautiful brand new building out here in West Des Moines that just opened here in the past handful of months. We've got a fraction of our team in, and can't wait till after COVID-Geddon's over and we can have everybody up to tour it. But again, big takeaway there is committed to the annuity space, been around again over 130 years, and we're A+ rated. So I think that in times of uncertainty, that means a lot, right? I think A+ always means a lot, but especially now where you're sitting down with clients and there's a lot of uncertainty in their lives with COVID, financial markets, things like that, social issues. So that means a lot. And Jim, if you want to page over to the next slide for me, if you would. There's my commercial on North American, and wanted to, before we get into VersaChoice, which I'm super excited to talk about, I'm really passionate about it. Wanted to hit on a couple of items that maybe you're having trouble finding a home for this type of business. I know a lot of our competitors have kind of pulled out of these spaces, and the first one is non-qualified stretch business. I fully understand this isn't going to walk in your door every single day, right? But you're going to be sitting down with your current clients or prospects, and they may have questions about this. So know that you have a home at North American for non-qualified stretch business. Not every single product will work, but we will take it. So certainly keep us in mind when things of that nature come up. And then to piggyback off that on the next slide is, and I guess to me comes up even a little more often is, and actually the non-qualified stretch slide there was talking about the products. So we've got Performance Choice and VersaChoice, 2 of our great accumulation products that would really be available there. But the other one that I wanted to jump in, I apologize, on the next slide, Jim, is our inherited IRAs. And so a lot of changes with this as we think back, a little bit over a year ago to the end of 2019, right into 2020. And with the CARES Act, a ton changed with inherited IRAs. And so we stayed in the inherited IRA business, if you will. Again, I know a ton of our competitors pulled out. We still love being in this space. So, certainly keep us in mind for this. It does vary depending on date of death, right? So if we're talking a pre-2020 death before the CARES Act, then you can, use some other products. So Charter Plus, our MIGAs, we got, again, Performance Choice and VersaChoice. If it's a death after 2020, you're going to be a little bit more limited. So what we did as a company, and there are some outlier scenarios here, so this doesn't, my disclaimer doesn't fit 100% of the scenarios, but for the large majority, they're going to run into with the kind of give and take on that was, if we're going to keep inherited IRAs and give clients these tax benefits, the IRS said we need something in return. So we can't stretch them for the lifetime of the person's life now, right? So it's got to be a 10-year payout from the date of death. So to ensure that, we've limited it down to our Performance Choice 8 product, which again, is a fantastic shorter-term accumulation play, and then we can also use it in our immediate annuity from 5 to 9 years. So big takeaway here is, I don't expect you to memorize the products you can use or whatnot. That's something you can reach out to our sales desk for, or obviously, Jim and the folks there can help you with that as well. But keep us in mind, as those non-qualified stretches, those inherited IRAs come up, we have a home for them here at North American, where, a lot of our competitors may or may not. And not only do we have a home, but we can place them into our super competitive products and really our top accumulation products. So with that, that's my kind of little commercial, if you will, on some kind of, various business that we can accept that maybe is outside of the norm somewhat. And then would love to jump over to the Versa Choice if you go to the next slide for me, Jim. And, and actually, even before I do that, the next one's going to be a marketing piece I wanted to mention on the inherited IRAs that we have. And I'm going to get an email to Jim, and he can send this out to all the attendees. And it's a fantastic piece on inherited IRAs. Will help you and your clients walk through, especially with the new legislation. And I apologize, I called it the CARES Act. It was actually the Secure Act. CARES was about 3 or 4 months later. It made some other changes, but Secure Act helps walk through those changes and how that maybe affected clients and what you can do to help them out. But the main portion of the webinar that I really wanted to talk about is our Versa Choice. And, as we think about this product, hopefully you're a little bit familiar, but even if this is brand new to you. So I think most people on this call will be familiar with the Wink report, right? And that is an industry aggregator. They aggregate data. They do other various services, but one thing they do is aggregate overall sales from company, products, things of that nature. And Q3 last year, so we don't have Q4 results yet from 2020, but Q3 last year, our North American Versa Choice Index Annuity was the top-selling accumulation-focused product in the industry. Number 2 overall, number 1 accumulation-focused product. So we were obviously excited to see that. We knew sales were going gangbusters on it, and been trying to get this story out. So if you haven't had a chance to listen to the story or take a look at this product, I will humbly say that maybe you've been missing out just a little bit. So can't wait to dive into it. So I'd like to kick over the next slide for me, Jim. We'll start talking about what makes Versa Choice, I won't even say different, but as we think about accumulation products, right? And it's got a flexibility feature that we'll get to in a little bit for liquidity, but really what makes an accumulation product? It's the indexes inside, right? If we can be honest, they're all in a 7, 8, 10-year wrapper. Fine. So one thing here at North American, like other large companies, we get tons of investment banks and various folks that come to us and say, hey, we want to put our indexes within your product, and here's what we can do for you. We're super selective, and we really only want to go with what you would call household names that are going to be fully transparent. We don't have any interest in cooking up indexes here at North American where we're pulling the levers on it, or the triggers, if you will. And so a couple of the indexes within the product that I wanted to highlight. First off, the Snp Mark 5 index. If you've done business with us, you've seen the returns, or if you've looked at them, you've seen the returns over the last 3-4 years. They've been fantastic. One thing I really love about this index is we've all seen back-tested indexes that look great, and then they go live, and maybe they didn't perform quite like we wanted them to. This index has actually done better since it's gone live, really, than what the back testing would show. You can tons of numbers on that screen, and again, happy to get this rate spotlight out to you. I think big takeaway on some of it, especially Mark 5. If you're looking, well, where are the returns? Depending on which one you look at, high, low, most recent, you're somewhere in the 4 to 6% range, which is, I think, really kind of what we can expect, especially with a no-fee index, and maybe getting up to 7 on the high end. And then the other index that we introduced midsummer last year was our Fidelity Multi-Factor Index. Again, another excess return index, vol control, paired with Fidelity. That's going to be a household name. You sit down with your clients. I'm sure you know about it. You sit down with your clients. They're going to have heard the Fidelity name. Something that was brand new to us, admittedly not brand new to the industry. Other Other competitors and carriers have had it as a fee for rate, if you will, where you're going to buy up that participation rate, and we're going to offer it in a 1 or 2 year option with the Fidelity. So as you can see some of those highlights there, you know, the par rate you could buy on the high band all the way up to 165% on a 2 year. Now again, we do offer the index without the fee for rate. So if you don't want to go that route, you don't have to. But we offer that additional pop, and really over the course of time, what's that going to allow us to do? Well, not only North American, but everybody else in the industry, it's been low interest rates for a significant amount of time, right? So this gives a chance for us, or an opportunity for the clients, to see more interest pass through. And you know, if you go kind of down towards the bottom right hand side of that chart, you'll start seeing that 2 year fee for rate. You're looking at, you know, returns somewhere in the 8 to almost 11.5% range, or almost 11% rather, not 11.5, over the course of a 10 year annualized run. So you know, you start really looking at some additional pop there. And one thing I always like to talk about and preach is that, you know, you don't have to be all in or not all in on the fee for rate. You could look at doing it as, you know, part of the makeup of the application and where you're going to allocate to. And I think a lot of diversity makes sense, whether if you're looking at 1 or 2 years fee for rate, not doing that. But super excited there. So I think what you can see from this chart again is, you know, 4 to 6 on if we're going to go no fee for rate, maybe into the, you know, 6, 7 range. And then if you've got a client that wants that potential for the additional pop when the index is performing, then you can start seeing close to potentially those double-digit returns. So super excited about it. I love having those 2 indexes in there. Again, fully transparent. They're, you know, public indexes, so you can send your clients out. There's microsites. They could track it on a daily basis if they want to, do as much research as they wanted to. Nothing that you know, we've done here at North American as far as the index goes. Pop over to the next slide, if you would, for me, Jim. And so we hit on, you know, really the accumulation potential there, and the pop where that is. The second piece of this product is the flexibility and liquidity. And to set the stage here, this is fully optional. So product can be written without this rider. There is a 60 basis point fee for these benefits, but there's, you know, for a lot of folks, I think there's going to be some real validity to what they can get here. About 40% of our applications do come in with this liquidity flexibility rider, however you like to think of it. On the next page will be a nice breakdown on it, and we've got some fantastic marketing materials that talk about the various features. And yeah, appreciate that, Jim. And so as we pop through the first 2 of them, the way I like to put this is there are 4 benefits. The first 2 any client could get regardless, and it's enhanced penalty-free withdrawals. So essentially what that means, or what it does mean, is that you can take 10% out any contract year, including year 1, so does have first year liquidity. If you don't take a withdrawal in any contract year, it gives you the opportunity to take up to a 20% penalty-free withdrawal. So if you get that unexpected expense, or decide all of a sudden that you know, want to take that once-in-a-lifetime vacation and pull extra money out, you can certainly do that. So some great liquidity there features. And then the return of premium. Anytime after year 3, if the client decides that they want to get out of the contract, again, they can do it penalty-free. And it is a true return of premium versus some of the other ones you'll see out in the industry. So you give North American $100,000, or your client does, at the end of the 3rd year, if they decide they want to get out, we'll give them $100,000 back. So we do return the fee for this rider. I always look at this as the peace of mind, right? So you might meet with some folks that, well, I don't know if I want to get, you know, Mr. or Mrs. Agent, I don't know if I want to get into a 10-year product. Well, I've got a way that ultimately you can get out if something happens. What we tend to find is that while people gravitate towards this benefit and really like it from a sales perspective, they never use it because they get into these products and they start seeing not only the returns they're getting, but if there is a market downturn, that the premium protection. So don't see a ton of usage on the return of premium, but it is there for clients. And then, Jim, if you page over one more time, it should pop up the next 2 benefits that make this product a little bit different than what you're going to see in the industry. So, you know, we always think of income doublers for whether it's nursing home or ADL benefits. This is different. So these are going to be essentially enhancements to the accumulation value. Remembering there's no income rider with this product. And the first one is ADL-based waiver of surrender charges. So pretty easy there. And essentially what it is at the time of application, client will initial on the disclosure page that they can perform all activities of daily living. If at any point after issue, they get a doctor's note that signs off that they can no longer perform 2 of 6 ADLs, and it's expected to be permanent, they now have a fully liquid pool of money with us. And it doesn't matter if it's after 20 days in the contract, 2, 3, 4 years, whatever it might be, fully liquid. So they could pull it all out, they could pull part of it out, however they want to use it. The second piece of the ADL benefit, and again, still follows need the doctor's note signed off, going to be permanent, can't perform 2 of 6, is what we call our enhanced accumulation payout, essentially, if you will. And the way that works is there is a 2-year wait. So starting in year 3, it starts at 110% of the premium. So if you had 100,000 in there, we'll take that times the enhancement percentage, and then works its way up to year 6 to 125%, and then sits there. So it gives the client the opportunity to take their accumulation value times the multiplier, and then we pay it out in a 5-pay to them. So think of it as almost a 5-year income payout if they wanted to. If the client passes away prior to 5 years, their beneficiary gets the remaining payments. One way from kind of a sales perspective, I always like to talk about this, is that most people want to stay at home now, right? When they can't perform 2 of 6 ADLs instead of maybe going to the nursing home. So maybe as the client, I can no longer perform 2 of 6. I need to make some modifications to my house to make it comfortable to stay here. So I take out, now I've got the fully liquid pool of money, right? So I pull out a chunk of that money on the waiver of surrender charge to make those one-time modifications if I need it. And then I take the remaining pool of money times the multiplier and go over the 5-pay. So just, that won't necessarily fit for everybody, but just one way to kind of think about it from a sales perspective, if you will. And so that's the Liquidity Writer. Again, 2 features that anybody can use, and then 2 that you can't be able to perform 2 of 6, and it will jump in there. Again, with it, I can't reiterate this enough. With it being an indexed annuity, there's no medical underwriting, anything like that. It's strictly client initials on the disclosure that they can perform all 6, and then the doctor's note. And again, all 4 of these features for 60 basis points. And then with that, Jim, if you want to jump over and you hit on there, the accumulation value multipliers I talked about starts at the 110 in year 3, and then works its way up year 6. A couple nuts and bolts. I'm not going to spend more than 30 seconds on this slide. Again, 10-year surrender charge, 10% free withdrawal built in. Again, you can buy that up to 20% with the ELB rider. Pretty standard on a 10-year product. Will issue through 79 in most every state. Minimum premium is $20,000, so keep that in mind as well. It's kind of your nuts and bolts screen there. I guess one thing I should mention, modified single premium. So what that means before we jump to the EPC program is that it will take flex premium the first contract year, but not after that. So just keep that in mind for me. And then I'm going to finish up here with the EPC program. So we hit on some of the various types of business that we would take, non-qualified stretches, paired IRAs, and really where VersaChoice fits as far as accumulation plays go in the industry. So that all that benefits the client, right? Which is ultimately why we're in this business. But I always like to say that it's nice for everybody to have a kind of a piece of the pie and the incentive, if you will. And here's where it jumps in for our agent friends is our EPC program, and this is back for about the 3rd year in this iteration of it. And I always love talking about this. So there's 3 different levels, as you can see there. There's one at the $1 million level, there's one at the 3, and then one at the 5, which is going to be our top level. And at each one of those, and it's based off of indexed annuity business issued in a particular year. So each one of those, there's going to be additional compensation incentives for you as the agent. This comes directly from North American, so it's an add-on. As you can see, it's 50 basis points, additional 50 to 1, and then 150 at the top. One disclosure I'll put on here for have any registered reps on the line with us is obviously it does need broker-dealer approval, so definitely want to make sure on that prior to thinking that you'd be enrolled in this program. If you go over to for me, last slide there, Jim, this will give a kind of a breakdown, and actually one more. So that was a pop up there with some of our disclosures on it. And yeah, you can page all the way through that if you want to for me. Appreciate that. So this kind of shows you the breakdown. And so at $1 million, and one thing I was doing a little teaser there are retro payments. So at $1 million, you're getting that additional 50 bips. It's retro back to the beginning of the year. So anything you write January 1 in the year moving forward. So you get a $5,000 payment when you cross that $1 million threshold with us. If you look up towards the top, so you're getting the additional 50 bips. Any FIA premium between $1 million and $3 million, that additional 50 basis points would equal 10,000. The cool thing is when you hit that $3 million, you're retroed back again on the 50 bips. So now you're looking at an additional 15,000 on top of the 15 you've already gotten. If you've got the ability in between the 3 and 5 million levels, that's an additional 20,000 for the additional point in comp. You hit that top tier with us, that's another 50 bips, obviously, retro again back to $1. So 25,000 retro payment. And I'm sure your eyes have already gone over to the right side of the slide, and it's what I always love to point out to folks. If you hit 5 million in FIA premium with us in this calendar year, it's going to be an additional 75,000 in your pocket. If you can do more than that, you will continue earning the additional 1.5% until the end of the year on any of your index annuity business. And one new cool thing that we did, we heard loud and clear from the field, is that you need to kind of grandfather in, if you will. So end of 2021, if you've hit any of these levels, you'll start the next year out at those levels. So it's as rich of a agent compensation program really as I'm aware of in the industry, especially at these levels. So certainly keep that in mind. I hope the Versa choice kind of whetted your appetite on. I'd really love to get this in front of my clients as their accumulation play in the industry. And then also the EPC program can certainly help out with that. And we love rewarding our loyal and top producers. And with that, Jim, that'd be my prepared comments. We'd certainly open up for questions if there's anything.
Jeff, thank you. And there are a couple questions here.
Awesome.
And so the first one was, and it kind of reverted back to your ROP, your return of premium question. Just for clarification, one of the producers wanted to know, is the ROP just the original premium, or would it be the higher of gains, or would there be gains credited to it also? So just clarification again on the ROP.
Yeah, for sure. So, and that's a great question. Appreciate it. So the way the ROP works, it's going to be one of two things. It's either strictly a return of premium, or so if they say they get out of the contract at the beginning of year 4 and they've made 10,000 in the contract, right? So we're at 110,000 accum value. We would give them back the 100,000. So they would forfeit any interest credits. Now, as they move forward through the contract and surrender charges and MVA, you never know how that's going to work out. But if the surrender value would be more than the return of premium, we would obviously give that to the client as well. But they don't get to keep their deposit plus gains. Okay.
And then another question was regarding the caps participations, and that's annually declared or on the anniversary. Is there I guess they're questioning what the minimum is, like the contract minimum. I don't know if you want to go through all those, but do you have that somewhere that we can send to a producer, what the contract minimums are on the caps and PRAs?
Yep,
or
for sure. So
is that somewhere, can we find that on the website? I guess that's the other question.
Yeah, so it's going to be part of the easiest way to find that's in the product disclosure. So I don't have that right in front of me, and I don't want to quote all of them. But yeah, that's something we can get out. One thing I guess I would say, just kind of as an overall general comment, if you will, specifically to the Mark 5 and to the Fidelity indexes, they're what we call excess return indexes. So they, as a general rule, you're going to see more stable renewal rates. So other end of the spectrum would be like S&P 500 participation rate. You're going to see, up and down there based off of volatility and short-term interest rate pressures. where these would be the other end of the spectrum where you're going to see, super steady renewal rates.
Mm-hmm. Okay. Another question was, I know you stated the minimum premium is 20,000. Is there not there's a band of rates that change at 75,000? I believe that's correct.
Correct. Yep. So at 75,000, that's where you jump into the high band, and rates, in all honesty, get it even more attractive there. So, if you're working with folks that have that little bit larger deposit, it may even work better at that point.
Okay. And you mentioned that I believe 40%? I forgot the percentage now. I didn't write it down. Of the apps include the enhancements. What is the average case size of the VersaChoice?
Yeah, average case size is going to be around 140,000. So one thing we've seen with that banding at 20 and 20 and 75 is that it leads itself to be a little bit larger cases. So people wanting to take advantage of those better rates. So we're about, I think, 140,000 average case size on VersaChoice. And if you looked at the overall portfolio, it'd be closer to, say about a little over 100,000.
Rest of the products, 100,000.
Rest of the products, correct? Yes.
Okay. Well, there is another question here. Right. So it was kind of a follow-up to that rate question was if first year cap is 10%, then the next year could go to 1%. I don't know which strategy if that's a general question or if it's specific to a strategy. So again, we can get the guaranteed cap or participation rates out. It would be through the product disclosure. So I'll just have that sent out.
Yep, that'd be through the disclosure, correct. So they're going to be like, any other index annuity that's out there. It's going to be, whether it's a 1 or 2 year reset, they're going to be, annually renewable by the company. And again, I'd reiterate, these excess return indexes, they're built to be more stable. It's the reason not only us as North American, but you're seeing our competitors are coming out with a good amount of excess return indexes. Fidelity, we haven't hit any renewals yet. The one thing I can say with like the Mark 5 index, for example, is it's been out 3, probably going on about 4 years, and what we're seeing renewal rates there on the par rates, they're renewing, up or down within a few percentage points of where their par rate was initially. So it's been very steady.
Okay. And Jeff, real quick, what states the VersaChoice is approved in? Most states. What states is it not? Would it be easier to say, or do you know off the top of your head?
Right offhand, I think we've got approval in 49 states, New York being the outlier, and we don't have any product approved there. And I guess while we're on the kind of the state approval, if you will, one thing I want to mention about those ADL benefits, if we have any of our friends from California on the call, or if they ever listen to this, we do have those ADL benefits available in California, which can be a little bit tricky to get approved.
Fantastic. That's good to know. Very good. Well, I don't have any other questions here, but I will leave everyone with this. If you are looking to get more information, would like to get an illustration on the VersaChoice, please feel free to contact me or to North American. We would encourage you to take a closer look at the VersaChoice, and if you need to get appointed with North American, you can do that through our website portal at Financial Brokerage. So that's www.financial-brokerage.com. And if you don't have a login, you'd need to create a login to our website and then to our contracting portal, and you can just do that online. So we appreciate, Jeff, so much, all of the information today. And everyone out there, we appreciate your time. And if there's any questions that you think of afterwards, please feel free to reach out to me. You can email me at jguynan@fb-inc.com. We thank you so much today for your time, and have a good rest of your week.